Hello, this is John Piper with a weekend video clip, and it's Saturday the 8th of July. Starting with the chart of the Dow again. Basically we've got this 1, 2, 1, 2, 3 to the fifth wave failure, 4 down to there, now fifth wave coming in. This fifth wave, the first wave here lasted about a week or so. This one actually lasted longer than that already, it has made new highs already, so a peak could be in here. And we could be due a fourth wave compared to this second wave here. So could easily fail, I think, at the moment. I mean, essentially we're heading towards a major peak. Robert Prechter in the US reckons this peak will lead to 100 years of negativity, equivalent to the Dark Ages, medieval Dark Ages and the Black Death, or the South Sea Bubble. I'm somewhat more optimistic than this. I guess it's hard to be more pessimistic. I cannot see us entering that kind of phase. We've got the internet, we've got cryptocurrencies, we've got a lot of positive stuff, technology working for us right now. So I don't see anything like that happening, but I think we are going to see major disruption in the fiat currencies particularly, and that's going to cause a whole load of problems. And of course, I think certainly markets are well overvalued and will be heading downwards in a big way, with peaks coming in this year and next year, but all the risks now is to the downside. So it's really, I don't see much more upside potential, but I do see a lot of downside potential. And the big call's all about the big moves, of course, which is what I'm looking for. Right now, it's possible the Dow has seen a peak here. We could see a corrective fourth wave, but even that could be quite a substantial matter. But right now there's no actual sign of that, so that the uptrend is intact for now. Alright, FTSE could have peaked already. Let's see, peak at 7599. If we count this as a 1, and this is an irregular A, B, C as a 2, then it's possible we've got a 1, 2, 3, 4, 5 coming in now, followed by a corrective rally. Probably we've got a weak corrective rally, because if it takes out the low of wave 2, sorry, it's low of wave 1, isn't it? So actually it could be a bit bigger. But we could see a low next week, followed by a corrective rally, one more down. So that would be a sell signal on FTSE, major reversal pattern, which obviously would be quite important. Just to show you the 5-wave count of the 2016 low, 1, 2, 1, 2, then 1, 2, 1, 2, 3, 4, 5, ABC fourth wave, 1, 2, 3, 4, 5. So that peak could be it for FTSE. Certainly, I'd say we could get a fifth wave coming in, and count that as an irregular 2. Let's have a look at that quickly again. So this is the hourly chart again. So that's a 1, A, B, C, 2, 1, 2, 3, 4, and then a fifth wave coming in now. That will complete waves 1, 2, and 3, with a 4 and 5 to come in. Maybe catch a rally to there, one more decline. So by the middle of, let's see how long. Yeah, I guess by the time expiry comes around in a couple of weeks' time, we could have seen 5 waves down on FTSE. So that would be of some import. Alright, the DAX saw a peak here around 12,960. 1, 2, 1, 2, 3, 4. That goes to a new low. Haven't seen a new low yet. Possibly 1, 2, 3. We'd have 5 waves down here. So there'll be a 1, a 2, 5 waves down to there. Similar pattern of FTSE, with a rally due and a fifth wave coming in possibly. Once we see the 5 waves down, again, that would be a warning sign that a key reversal has been seen on the DAX. So I'm looking out for that quite carefully, obviously, because we could start to see some very strong moves. By the way, if any one of you are running a system that sells put options, now would be a time to consider that very carefully, because we are entering a bear market. Then they can be very different animals, much faster moves to the downside. We've had a bull market now since 2009, so 8 years, and it's very easy to become becalmed by an 8-year bull market. And things change, and what works in a bull market may well not work in a bear market. So I would suggest you pay heed to that warning, as it could be extremely important going forwards. Alright, gold is back below the 200-day moving average, that thing there. This still looks like an impulsive move. This looks like a corrective move. This could easily be an impulsive rally. I think that's the high there actually. A, B, C. 1200 is a key support level. So I think certainly if we go below 1200, then I guess we're going to test 1120. But I would think there'd be a strong battle around 1200. So that's my current expectation. I probably won't do too much on gold until I see something fairly definite. Alright, silver looking far worse than gold. This is what I call a wave 1. A, B, C. A, B, C I guess. A, B, C. Big spike last week, a flash crash. See how that develops, but currently the tail is not being tested very much. There could be various reasons for this sort of thing. I mean, it could be a large party positioning for a big move. It doesn't hurt to take out all the stops and start buying at the lows, push up again. It means you get good positions. People have been stopped out who want to be long, so they want to buy back. So that could be a positive. It all depends how it goes from here. All right, finally a quick look at Bitcoin. When the Cyprus crisis hit, the government eliminated a portion of debt by confiscating bank accounts over a certain level. I mean, to the system, a bank account is a liability, i.e. a debt. If there's too much debt, then it needs to be reduced. You could just cancel all the debt. I'm not quite sure how that would work. It'd be quite a bold move. It would sort of set things back to zero, I guess. That may be going too far, but confiscating bank deposits is something that's happened before. Currently, Bitcoin and the cryptos have a value of about 100 billion. Apple alone has a value of about 800 billion. I think that puts it in perspective. Right now, the cryptos are probably below the radar to an extent because they're just too small to worry about too much. If we get market peaks, we get worries about confiscation, etc., etc., then the cryptos are a fairly safe haven. You don't need very much money diverted from stocks, say Apple 800 billion, or from bank deposits or whatever, to make a huge impact on the crypto space. And I think that's one of the reasons for getting involved in cryptos right now. There are complications, it's not easy. I'm writing a course actually helping out on, or trying to help out on all the various parameters, but I still think the more I study this area, and it is quite mind-boggling time to time, the more I think that it's an essential area to be involved with, given the world we live in and the way markets are heading right now. Anyway, let's have a look at this. Right, the peak around 3,000 came in here. Now I'm looking at this as a triangle with a breakthrough last week. So I usually went long. Entry was around 25.20, 25.60, depending on. It was moving quite fast when I sent the alert out. I moved the stop up to 25.60. We got stopped out. So you either made a profit, you made a small loss, but it was roughly around break even, I would suspect, depending on your entry point. Now what's happening now? Here is the lower parameter of the triangle. Quite well documented. It's not precise. I mean, this one didn't quite make it. So it's possible that this was at the triangle actually is an A. That could be wave D there, which would mean that the triangle has been sort of going up a little bit. The upper parameter to there. In which case we're now actually bumping along the lower element. That would then be wave E. So A, B, C, D, and E, which actually fits rather well. So that would be a kilo coming in now. Right now I'm still looking to go long. If we break below here, that would change. So I think next week could be critical. Of course, Bitcoin is being traded as I speak. I mean, this chart would be moving if it didn't have the Camtasia working on it. IG doesn't fire up until tomorrow. I think FX Choice fires up on Monday. So I'll be looking quite carefully at IG tomorrow. I may send out an alert if I see something that's interesting. But right now it looks to me like we're seeing this triangle. You could count it two ways. You could stick with the original triangle. I break through there, and this is a 1, and this is an ABC2 with a third wave due. Or you could say it's all a big triangle with the breakout due. But of course the breakout could come to the downside. That would change everything. If this lower parameter holds though, then that would still be a very good buy signal. But the only slight worry in the current situation is we do have a soft or hard fork coming up. I've seen 2 dates for this, but in the next couple of weeks, certainly by the 1st of August, Bitcoin may be splitting into 2 separate entities. It does involve risk. So it seems a strange time when things might rally, but the chart pattern is more important to me. But of course there always are risks in these areas, and you obviously have to use stops. With IG, of course, the problem is because it doesn't trade on Saturdays, you could see a sharp move without your stop being actioned. So far, I've actually found that when I've been positioned, Bitcoin may have bounced through my stop, but then bounced back, so it's actually been a good thing. However, if it fell 200 points, it wouldn't be a good thing. It would be a bad thing. Anyway, this is a fairly clear chart. The potential is huge. I showed you Bill Adol's chart during the week to subscribers. He did say the count was quite difficult, but he'd also said that a move to 5,000 was certainly realistic. Certainly a move above 3,000 would be expected from a 5th wave. This is a 4th wave, incidentally. So there's a lot to play for. You see 2,500 points coming in, then clearly at well, I think even £10 a point, 25 grand. So it's there could be a certain amount of substance here. Right, on that note, I'll call it a day. If you found that interesting and useful, back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.